Can interest rates and home prices soar at the same time? Coming up on this Silicon Valley Snapshot. My, oh my, those interest rates are getting high, aren't they? And they are continuing to climb. Who knows when these rate hikes are going to end? And so many home buyers and sellers alike here in the Bay Area have been asking me, Danny, when are these interest rates or when are these home prices finally going to come down? And could the interest rate hikes have a negative effect, finally put an end to what has been a white hot market now for many months? Before we get into the data and before we get into the stats, if you are a home buyer in today's marketplace and you're looking for a data set to help you with your home buying decision making, you're getting beat out right now and you're trying to figure out what kind of data here can support me in my home offer process, or even beforehand, you're thinking about, where's the best place? Where's the best opportunity for me to buy right now, given my circumstances? All of that data will be delivered to your inbox when you text the word data plus the area or the zip code or the neighborhood that you're looking in to the number down below. And if you're a home seller in today's marketplace and you're trying to figure out, should I even sell my home? Is this the right time to sell my home? Every single area in the Bay Area has different seasonality. And so being able to look at a data set that shows you the right season to put your home on the market is imperative. And also how to price the property right now. Pricing strategy matters tremendously. And so you can text the word data plus your property address to the number down below and we'll get that data sent straight to your inbox. Article from the New York Times this week posted the question, can interest rates and home prices soar at the same time? It's getting more expensive by the moment to buy a home in America. Mortgage interest rates, historically low during most of the pandemic, are rising faster than they have in decades. Look at that graph right there. The jump here just in 2022, that is a significant increase in interest rates. And we all knew this was happening. And my goodness, the conflict in Ukraine made it seem like for a brief second, like we were going to catch a break on the interest rate hikes. And that was a pipe dream, because literally the next week we saw interest rates rise more significantly than they have in a very long time. This is all on top, of course, of the home prices that have soared across the country over the past 2 years. Look at that graph. And my goodness, if you are buying a home here in the Bay Area, especially in counties like Contra Costa County, Alameda County, Santa Clara County, this graph looks like a cakewalk compared to what we're seeing here locally in the Bay Area. Even more so, the article goes on to say that the combined principal and interest that buyers are paying right now has taken off by more than 8% over the last month. Literally, in the span of 1 month, principal and interest payments have gone up an average of 8% on new mortgage applications. 8%. Think about it. That's a lot. That means essentially that your purchase power has come down by 8%. That is not going to be an easy pill to swallow. Article goes on to say, in normal times, rising mortgage rates are supposed to help cool housing prices. Now, this is where I actually disagree with this article. We've seen in previous Silicon Valley snapshots where I've shown empirical data from Robert Shiller, from the Case-Shiller Index, showing that there is no direct correlation, literally no direct correlation between interest rates and home prices in either way, meaning when rates go up, housing prices come down, there is no direct effect. Even though that would conceivably be the presumption, right? Like, oh, okay, well, rates are going up, prices come down. There is no correlation to that, or even vice versa. When rates go down, prices go up. It's possible, the article goes on to say, for now, that both measures will keep charging ahead together, making it increasingly expensive to buy a home. There are so many strange things going on right now, said Edward Sealer, the Associate Vice President for Housing Economics at the Mortgage Bankers Association. Yeah, strange is right. Strange is right, Ed. Nobody really knows what's going to happen over the next year, Mr. Sealer said. That makes it hard to predict when rates might start to act as a brake on rising prices. Again, it's hard to predict because in reality, the data shows there is no direct correlation between that. And you can see the graph right here. The Case-Shiller Index shows that there is no direct correlation between interest rates and home prices in any capacity. Among a subset of mortgages backed by Freddie Mac, the monthly payment new buyers are making has risen more steeply since the start of the pandemic than at any time in the last 25 years. Wow. That shows you the compounding artifact of both rising rates and rising home prices, says Sam Cater, the chief economist at Freddie Mac. We've had episodes of each in the past, but not this intense for both. It's safe to say that the current housing market is unprecedented in nature, just in terms of the overall environment that we're in right now. It is going to be difficult to predict what happens here over the next 12 to 18 to 24 months. We can look back at history, but it's pretty evident here that historically we've never seen a compounding effect of all of these different things. So we'll have to see what happens, because so far doesn't look like much has happened to the housing market other than it continuing to go up. The article goes on to say that rates and home prices could well continue rising together for a number of reasons tied to high inflation today. Rents are soaring now too. That means the alternative to buying isn't particularly appealing either. And in a time of high inflation, buying a home and locking in today's monthly payment for the next 30 years is a good way to shield yourself from rising rents. In a context of 8% annual inflation, a 4.5% mortgage interest rate is actually a decent deal. And this is something that, we don't really talk about that often on this channel, but the truth is that, well, first of all, a year ago, the rates were so good, but even now, the rates compared to the historical norm are far from ludicrous or terrible. In fact, they're still very, very good. Friends with a lot of agents around the country and who have been doing this for a long time. I mean, I've been doing this for like 8 years now, but I know people have been doing this for like 30 years. And they talk about some of the rates that they've experienced, in the 80s and the 90s. We're talking like 8, 10, 12%. Suddenly 4.5% doesn't look so bad when you compare it to 8 to 10%. Another thing to consider here, as the article goes on to mention, is that during past periods of high inflation, real estate has tended to be a better asset than other kinds of investments like stocks. So when you're just thinking about, well, where do I park this extra cash that I have lying around? Do I continue to rent, or do I park it into an asset, something that's actually going to appreciate over time while I'm living in it? Keep in mind that rising rates can also make rental inflation even worse, because it pushes most people out of the buyer market and into the rental market, driving demand there. This article goes on to quote a agent, Beth Abeda, I hope I'm pronouncing that right. She says there's a logic to going all out and bidding for scarce housing right now before it gets worse. Interest rates are not going to rise any longer once you've secured a home, and you're not going to pay even higher prices in 3 months. So what you think you're overpaying for today will be a deal in a few months because everything is increasing so rapidly. And then this is something that's very important to cover here, because 6 months from now, should rates continue to rise and housing prices continue to rise, there is a compounding effect to this. So you're getting in now, not only are you getting in at a lower price, you're also locking in a lower rate, which effectively is double winning, even though it feels like you're double losing right now by like overpaying. And by the way, the one who wins in this market is the one who overpays everyone else. That's just a fact. And so, unfortunately, you can't get out of overpaying in this market if you want to win. But the real winners are the ones who buy, honestly, like literally like a month ago or like right now, because as the spring market continues and we push into summer and early fall, we do push into that time frame where like, hey, it could kind of level off at that point. And so right now, buyers are still going to make equity in their property. They're still going to make equity gains. That may not be the case once August, September, October rolls around this year. Exacerbating all these challenges, there has been underbuilding in the United States for years, particularly in expensive coastal metros where housing is in high demand. Sound familiar? Higher rates don't solve that problem at all. It might bring the market a little more in balance, modestly more in balance, but it doesn't solve the fundamental issue. Higher rates, in other words, won't create more supply. If anything, rising rates across the economy will increase borrowing costs for home builders too, on top of all their other pandemic problems. Oof, that's a somber way to end the article. It's like, wow, we didn't think about that too. How interest rates could impact home builders negatively, which would decrease the amount of new inventory that the home builders are able to release, causing more inventory problems. and exacerbating the issue even more. And the way this article ends, honestly, is exactly the messaging that I've been delivering on this channel now for many months. This is not a demand issue. The demand is there. The demand is there in droves. What we have here in Silicon Valley in the Bay Area is a supply issue, and no interest rate hikes are going to solve the fundamental issue of lack of supply. In fact, interest rates going up and up and up is only going to cause the supply situation to get worse. Why? We've talked about this on other videos, but truthfully, when you think about the types of sellers that are selling in this market, we have lost the downsizer in the Bay Area. Meaning we've lost the person who sells their $2 million home to downsize into a $1 million home. Why? There's no $1 million homes left, A. And then B, their equity and everything in the home would make it so that they're barely getting that $1 million house after taxes, capital gains taxes and everything. And so they're downgrading their lifestyle for no money in their pocket. And that is not what downsizers want to do. They want to capture a lot of that equity and put it into other investment vehicles so that they can live off of that while living in a smaller home. But also think about this. We've got the upsizer, we've got the downsizer, we've got the death/probate sale, and then we've also got the investor. And so we've eliminated one of those four already in the downsizer. What happens when interest rates get so high that investors then start second guessing whether or not they should sell their property, do a 1031 exchange, or just hold on to the one that they've got right now because they've got such a low rate locked in right now. It's cash flowing really well. You put an extra 2 percentage points on the interest rate on top of that, it might offset any sort of gain that they make by doing a 1031 exchange into a different property. The increased rents could be offset by an increase in the mortgage. So increased rates could end up causing and impacting inventory levels even more than we can currently imagine. And that is a sobering fact right now as we head into the heart and the meat of this Bay Area housing market. If you've made it this far in the video, I just want to let you know I truly genuinely appreciate your viewership. It means the world to me. And so as a token of my appreciation, you can text the word free shirt to the number down below. You'll get a free Selling Silicon Valley shirt sent straight to your mailing address. And if you're not subscribed to this channel already, I would be super grateful if you could just hit that subscribe button and also give us a thumbs up and click the notification bell as well. It costs you nothing and it helps me get in front of more Silicon Valley and Bay Area home buyers and sellers just like yourself. So help me get in front of more people that need my help just like you. This is Danny Gould, everyone, Selling Silicon Valley, and I will catch all of you in the next Silicon Valley Snapshot.